Hello everyone and welcome to today's lecture. So today we are going to cover a very important topic. We are going to cover audit committee, corporate governance and LODR. Okay. So we will be covering today. Our target will be to understand the provisions, if there is any amendments, along with the practicals of the provisions. And in the next lecture, which is immediately tomorrow, I will be more focusing on the practical side because my target is to cover the theoretical and the provisions today and to focus more and more on practicals today and tomorrow both. Okay. So during the lecture, if you have any doubt at any point in time, please ask, please, drop the message or, use the app to ask the question. And that is very important because the more you will ask, the more you will understand the topic. Okay. So let's start the topic. Now, the corporate governance, audit committee and LODR. What is this topic and what we are going to cover exactly within this topic? When I talk about corporate governance or when I talk about audit committee or LODR, so there are some regulations prescribed by SEBI. Okay. There are some regulations prescribed by SEBI for the listed entities. Now, these regulations are known as the LODR regulations. Okay. These regulations are known as LODR regulations, which are amended from time to time. When I say LODR, it's a listing obligation and disclosure requirement regulations. Okay. And they are amended from time to time. When I talk about these regulations contain a lot of details, but very important. These regulations contain some regulations on corporate governance. When I talk about corporate governance, they talk about good governance, optimum board structure, optimum audit committee structure, other committee structure, what are the roles of audit committee, what is the related party transaction requirement, compliances, a lot of things are there. Nomination and remuneration committee, okay, details about resignations of auditor for the listed entities, a lot of things are covered under these regulations. And it is very important for us to understand these requirements because for the listed entity, we have to, provide whether there has been compliance with the, these regulations or not. Okay. As an auditor, we need to, talk about whether there has been a compliance with these regulations or not. So accordingly, we need to look into these particular regulations. Okay. Now, under these regulations, what we are required to do, like we need to understand particularly what are the criteria of corporate governance, what are the regulations of corporate governance, okay, and what are the details that are required to be complied by an entity. Okay. Before that, let me show you something on the corporate governance. Okay. Just give me a minute. And why it is important. This particular report will make us understand why it is very important. Why the corporate governance is important for us as an auditor. On your screen, you have a certificate of compliance with the corporate governance. Okay. This is the independent auditor's certificate on compliance with the corporate governance requirement under SEBI LODR. Okay. This is certificate which is issued by the auditor. Okay. Auditor of the company. Now, what is the certificate? If just let's go through the certificate first and understand what is our responsibility with respect to this certificate so that we understand, okay, what we have to do when we are looking for the corporate governance. Okay. See, this certificate talks about to the members, just like our audit report. Okay. Then this certificate is issued in accordance with the terms of engagement letter and the terms that has been agreed. We have examined the compliance of the conditions of corporate governance by this company. Okay. For the year ended this as stipulated in regulation 17 to 27, clause B to clause I of the regulation 46.2 and paragraph C, D, E of schedule 5 of Securities Exchange Board of India LODR regulations as amended from time to time. Again, very important. So what it says that regulation 17 to 27, clause B to I of regulation 46.2, paragraphs C, D, E of schedule 5 of LODR regulations. So they went ahead, they saw what are the regulations, they saw their compliance, and then they are reporting that they have examined the conditions, okay, of these clauses, these regulations, and these paragraphs, and they are then certifying something that let's see what is there they are certifying. Okay, what is the responsibility of the management? The compliance of the conditions of the corporate governance as stipulated under the listing regulation is the responsibility of the company's management, along with the maintenance and preparations of records and documents, everything, including implementation, design, and maintenance of internal control on the procedures. Okay, that is the management's responsibility. Now, what is the auditor's responsibility in the current case? Our examination was limited to the procedure implementation thereof adopted by the company for ensuring the compliance of the conditions of the corporate governance. Okay, so there was a limited procedures performed to ensure the compliance of the corporate governance. It is not an audit, nor an expression of opinion on the financial statement. Okay. As an auditor, it is our responsibility to provide a reasonable assurance whether the company has complied with the conditions of the corporate governance as stipulated in the listing regulations. Now, in order to provide a reasonable assurance with respect to, okay, what is the conditions of corporate governance? We need to first understand the conditions of corporate governance. We are going to do that in certain way. But here, as an auditor, we report that, okay, we are providing reasonable assurance whether company has complied or not. Then rest of the guidance note and everything. And then we have an opinion. In best of our information and according to the explanation given to us, we certify that the company has complied with the conditions of corporate governance as stipulated above in the above mentioned listing regulations and restrictions of use and everything. And then you have a auditor's detail like you do have in audit report. Okay. So this is something, a certificate of compliance with respect to corporate governance. Very important certificate. So this is a certificate of compliance which is required to be given. Okay, this is part of your annual report, which is also like attached and signed by issued by independent auditors report. Okay, now under this certificate we are talking about some regulations, regulation 17 to 27, clauses and paragraphs. That is something we need to understand. What are these regulations in order to, if we want to certify in future, we should be aware that, okay, what we are required to check. Okay. That is something we need to look into this. Okay. Now, let's talk about first regulation 17 to 27. Okay. Regulations 17 to 27. Now, when I talk about regulations 17 to 27, these are the core regulations for the corporate governance. 17 start from 16 is the definition. 17 basically goes for the your board structure, then 18 audit committee, then other regulations which are there I'll be talking about. Okay, till 27. So these particular regulations from 17 to 27, they are the critical ones for the corporate governance. Okay, these are known as the chapter 4 obligations of the listed entity for corporate governance. Okay, let us understand these particular regulations now one by one, and then we'll also understand their detailed requirements, how they impact listed entity, top 1000, 2000 entities and everything. So everything that we are going to understand is behind these regulations, clauses, paragraphs and LODR, and which contains the requirement of the corporate governance. I hope I'm clear. Okay. Great. So let's start with the regulation 17. Okay, regulation 17, very important regulation. Okay, I will be covering regulation 17 and 17A together. Now this regulation 17 and 17A, okay, they basically talk about requirements of corporate governance for board of directors. So I'll write board of directors. Okay. Now, what is the requirement of corporate governance for board of directors is specified under this regulation 17 and 17A. Okay. Now, what regulation 17 says that regulation 17 talks about composition of board. Okay. So regulation 17 first talks about composition of board. Composition of board of directors. And when I talk about composition, it says that what is a good composition or composition which is good from corporate governance point of view. So composition of board of directors which is necessary to have a good corporate governance. That is something regulation 17 talks about. Okay. What regulation 17 says that, okay, board of directors should be a combination of executive and non-executive directors, okay, with at least one woman director, and not less than 50% of board of directors should be a non-executive director. Okay, that is the first condition. So when I talk about composition of board, it talks about at least one woman director. Okay, at least one woman director. And there should be appropriate combination of non-executive and executive director. That will come in time. Okay. Now, when a company is top 1000, it falls under top 1000 entities, listed entities. And how I decide top 1000 based on the market value capitalization. Okay. When I talk about top 500, top 1000 entity, that is defined based on the market capitalization at the end of immediately previous year. So let's say, for example, if I'm talking about today, what is the top 1000 listed entities? So I need to see market capitalization immediately previous financial year. So if I want to check for year ended 31st March 2023, I need to go and see market capitalization as on 31st March 2022. Immediately previous financial year, end of immediately previous financial year. So based on market capitalization, I'll say, okay, this is top 500, this is top 1000, and the data is available publicly on the stock exchange and everywhere. So you can easily identify. So for top 1000 entities, based on market capitalization, the requirement of at least one woman director gets converted into at least one independent woman director. One independent woman director. Okay. So for normal companies, one woman director. For top 1000 entities, it becomes one independent woman director. So that is the first requirement for the composition of board with respect to the woman director. Okay. Now, second requirement, and very, very important requirement. Second requirement talks about with respect to the composition when you have a chairperson which is non-executive or executive. Okay. So what that requirement says that where the chairman of the board of directors is a non-executive director. where the chairperson of the board, person of board of directors is non-executive director. Okay. At that particular point in time, your 1/3 of the board of directors should be independent directors, at least. Okay. So at least at that particular point in time, 1/3 of board should be of independent directors. Okay. Now that was when you have a non-executive director as a chairperson of the board. However, when the chairperson of the board is not a non-executive director, okay, it's not a non-executive director at that particular point in time, the requirement changes. When he's a not a non-executive director at that point in time, what the requirement is? Requirement becomes that at least half of the board should be independent directors. Okay. At least half of the board should be independent directors. So if he is a non-executive, then 1/3, at least 1/3. But if he is not a non-executive director, okay, then at least half of the board should be of independent directors. Now, there is another condition. If your board chairperson of BOD is a non-executive director, but he is either promoter or related to promoter or related to person occupying management position or any board of directors, related to board of directors or one level below. So there is a condition specified. Okay, if he is a related person, in that case, so if you're non-executive director related to promoter, okay, or key managerial personnel, okay, or one level below of the BOD. Okay, if he is related to promoter or KMP or one level below to BOD, or he himself is a promoter, in that case, again, your requirement changes and becomes at least half of your board of directors should be independent director. Half of the board of directors of listed entity should be independent directors. And whenever I'm talking about the entity or company, it will be listed entity by default because LODR is applicable to listed entity. Okay, clear? Any doubt till now? Any doubt? Okay. So that is with respect to the chairperson of the board plus board of composition of board. Okay. Now there is one more condition with respect to the SR equity rights. I'll come in a while. Okay. Outstanding SR equity rights. But as of now, this is with respect to the chairperson of the board and the requirement of board of directors as per the chairperson of the board. Okay. Earlier we saw requirement of board of directors with respect to women director. Now we saw regulations or requirement of board of directors as per chairperson of the board. Okay. Now this is the requirement of as per the chairperson of the board. Now there are other requirements also under the same regulation for board of directors. So we are talking about good composition or composition which is good from corporate governance point of view. Okay. So for the top 1000 or 2000, so let's say we'll take top 2000 listed entity. For top 2000 listed entity, there should be at least 6 directors in board. Top 2000 listed entities, there should be at least 6 directors. Okay, in the board. So you should not be having less than 6 directors in the board of directors when your entity is in top 2000 listed entities. Okay, so that is very important. This is a requirement with respect to minimum number of directors. Okay. Now, the next requirement basically is with respect to the appointment of a person. Okay, appointment of a person who is either you can say aged more than 75 years or who has been not appointed earlier, he was denied, and a lot of things are there with respect to appointment of a director. Okay, now the first condition is that no listed entity shall appoint a person or continue the directorship of any person as a non-executive director who has attained the age of 75 years. Okay, so if a person has attained the age of 75 years, he should not be allowed to continue non-executive directorship. So compulsory retirement sort of provision that has been brought into. Okay, compulsory retirement sort of, but there is a exception to that. I'll explain. So no person shall be appointed or allowed to be continued as a non-executive director if he has attained the age of 75 years. Okay. Now, this is the requirement of the provision, but there is a condition. Unless, so there is an exception, you can appoint 75 years, person aged 75 years as a non-executive director, provided or unless a special resolution is passed. Okay, a special resolution is passed in which there should be a statement, explanatory statement, okay, to justify for appointment of such person, like why you want to appoint a person who has crossed the age of 75 years as a non-executive director. So special resolution, but special resolution should contain an explanatory statement. When you are circulating the notice for the special resolution, there should be a statement, okay, in which there should be a statement explaining, okay, explaining justification for appointing such a person. So if you provide or if you satisfy both these conditions, in that case, it is fine. You can appoint a person aged more than 75 years as a non-executive director. Okay. So this is for the person aged more than 75 years or who has attained the age of 75 years. Okay. Any doubt till now? Any doubt? So there is a question that if chairperson is a non-executive director, then 2/3 of the or 1/3, at least 1/3 of the board of directors should be independent directors. So the requirement is with respect to the independent directors. See, very good question. What if the Companies Act requirement is different than the requirements which are there in this particular regulation? Very important question. Very important. So you tell me, guys, what you will do when there is a different requirement in the Companies Act and different requirement in LODR? What you will do in that case? Very good question. Come on, guys. So what you will do when you have a conflicting requirement between Companies Act and LODR? Come on, guys. Good. Absolutely correct, Janvi. Correct, Namrata. Rahul. Correct. At that particular point in time, you need to comply with both. See, there will be a scenario where a particular requirement might be more stricter in LODR compared to Companies Act or vice versa. It could be the scenario that a requirement is more stricter in the Companies Act. At that point in time, you need to comply both. It is not the or case. We need to comply both Companies Act plus LODR. Now, in case of listed entities, they need to comply with the Companies Act also because they are the companies formed under Companies Act. Plus, if they are listed, hence they are required to comply with these SEBI regulations. So you need to comply, you need to adhere to both of the requirements. It's not either or, it's both. Okay. So in case if there is a conflicting requirement, you need to comply with both. There will be hardly any case where there will be a requirement which will not allow a Companies Act requirement which will not allow you to fulfill requirement of LODR. It will not be the case, but it will be the case where either LODR is more stricter or Companies Act is more stricter. Okay, let's say for example with respect to independent directors, the requirement will be okay, LODR is more stricter. So if you comply with LODR, by default, you will be complying with Companies Act or vice versa. So in that case, you need to comply with both. Okay. Then there is one important requirement. Okay. The requirement is that when a listed entity, okay, when a listed entity has the outstanding SR equity shares, okay, outstanding SR equity shares at that particular point in time, the independent directors requirement changes. Like the board of directors should have at least half of independent directors. Okay, the board of directors should have at least half of independent directors. So if the company has outstanding SR equity shares, if the company has outstanding SR equity shares, okay, at least half of BOD should be of independent directors. Okay. Any doubt with respect to this? Any doubt with respect to this? Okay. No doubts? No doubt with respect to SR equity shares. What are SR equity shares? No? Okay, I'll tell you. Now, there was a framework which was issued by the SEBI, issuance of DVR, differential voting rights. Okay, equity shares with differential voting rights. And in that framework, there was some requirement which was brought with respect to equity shares with superior rights. When I talk about SR, it's a superior rights compared to other ordinary equity shares. Okay. Now, in that case, when a company has equity shares with superior rights, there was some requirement which was brought with respect to the corporate governance. One of the requirement was with respect to board composition. We will see some requirement with audit committee, nomination remuneration committee, stakeholders committee. Okay, and there is also certain requirement with respect to prohibition of issues of SR equity shares in certain cases. Okay, but that was something, a notification which was brought or amendment that was brought, that if a company issues equity shares with superior rights, okay, in that case, these are the additional corporate governance conditions the company should follow. The listed entity should follow. Okay, so when I talk about outstanding SR equity shares, that is the outstanding superior rights equity shares. Okay, so we will be seeing additional corporate governance requirements with respect to the SR equity shares from time to time with each and every regulation. Okay, clear till now? Then another requirement with respect to the board of directors, you will say how many requirements we have. We have a bunch of requirements with respect to appointment of board of directors. Then we have another requirement with respect to meeting of board of directors. Okay, so right now we are looking into the requirements for the appointment of board of directors. We have a bunch of requirements. That's why it is very important for us to comply with the corporate governance requirement. Okay, that's why it's a very important topic. And this is just regulation 17.1 which I am talking about. 17.1, not 17 clause 2, 17 clause 3. What I'm talking about here is 17 sub clause 1. That's it. Basically, if you see, this is age of 75 years, that is 17.1a. So we are just talking about the first clause of the corporate governance requirement of regulation 17. Okay. I'll write the regulations for your reference. Okay, so that you can revisit at any point in time if you want to. Seventeen C, you have a 17.1D, and you have then 17.1A. Okay, so 17.1A, 1B, 1C, you have 1A and 1D. Okay. The next regulations is 17.1C. Okay, that talks about basically when a person, okay, was earlier rejected by shareholders for being appointed as a managing director or whole-time director. Okay. Now, when a person who was being appointed or reappointed as a managing director or a whole-time director or a manager, but somehow he was rejected by the shareholders at a general meeting. Okay, he was rejected by shareholders at a general meeting. Then in that case, he shall be appointed only with a prior approval of the shareholders. Now you will ask, okay, if in this case we need prior approval, then what about the other cases when he was not rejected? Okay. Okay. So I'll bifurcate between when he was rejected or he is not, or a fresh appointment or a regular appointment. So in case of a listed entity, appointment and or reappointment of directors. Okay. In case of a listed entity, okay, when there is an appointment or a reappointment of a person on board of directors or as a manager, okay, then the appointment can be done before, but that appointment should be approved by the shareholders in the next general meeting or within 3 months time frame from the date of appointment. So appointment can happen before, but that should be approved later on by the board of directors. So in normal case, appointment of person on BOD, okay, needs to be approved by shareholder in either next AGM or or within a time period of 3 months from date of appointment, or within 3 months from date of appointment. Okay, whichever is earlier. either next AGM or within 3 months from the date of appointment, that should be approved by the shareholder. Okay. If that is a condition that is being satisfied, then fine, you can appoint the director before and then you can get it approved. Fine. Then, in case of public sector company, okay, appointment or reappointment of a person on board of directors or manager is taken at generally at the next AGM only. So in case of a public sector company, you go for the next AGM only. Like the 3 months condition is not applicable over there for public sector company. But when there is a person who was being appointed or reappointed, including managing director or whole-time director or a manager. Okay. So in case person was rejected, who was earlier rejected, shall be appointed only with prior approval. Okay. Again, in case of appointment of a reappointment, a person can be appointed on board of directors in normal case, but within 3 months or next AGM, you get it approved from shareholders. Fine, no issues. In case of a person who was earlier rejected by shareholders, let's say I appointed the person, in next 3 months or AGM, I presented the proposal for his appointment in front of shareholders, but he got rejected. Can I go again and appoint that person as a director and wait for next 3 months? Answer is no, because that person has been rejected earlier. In that case, I need to take a private company subsection 1 of section 102. Okay. For considering the appointment or reappointment of a person who was earlier rejected by the shareholders. So you need to also provide the statement, justifications, okay, why you want to appoint the same person who was rejected by the shareholders. Plus, you need to have a justification from nomination and remuneration committee why they are recommending such a person who was rejected by shareholders earlier. So there is a lot of statements and everything is required behind appointment when a person who was earlier rejected. Okay, so I'll continue here. Must have a statement under section 102 1 of Companies Act. Okay, for appointing and reappointing. Plus a detailed explanation and justification from or by nomination and remuneration committee. For proposing his appointment or reappointment. So these are the two things that should be, there when you are sending a notice to the shareholders for appointment of reappointment of a person who was earlier rejected by shareholders. Okay. So this is the requirement of the particular section. Regulation 17(1)(c). Okay. Any doubt till now? Okay. One good question. What is the logic of having half of the board of directors as an independent director when there are SR equity rights? Okay. Now, when you have a SR equity rights, if you read the framework that was issued by the SEBI on DVR, differential voting rights, okay, at that particular point in time, if I have SR equity rights, means equity shares with superior voting rights, okay, already I have something which gives, what you can say, more rights to a particular class of equity shares or class of shareholders. Okay, in that case, to avoid any kind of operation by the majority over the minority, to avoid any kind of any kind of problems, board of directors, okay, or any to avoid any kind of scenario where there is a pressure from shareholders to board of directors, or any kind of interference from shareholders with respect to the working of board of directors. Okay, or you can say at that particular point in time, if equity shares with superior voting rights are present, shareholders who have the superior rights or majority can appoint their board of directors or something like that. To avoid certain kind of scenarios, half of the board should be independent directors, so that when I talk about independent director, they are not related, they work independently. There is a lot of requirement or conditions to be fulfilled for an independent director. In that case, you can expect the board of directors being functioned independently without any influence of the majority shareholders, or in favor of majority, or in the operation of minority. And to avoid all those conditions, we have half of the board as an independent director. So that was the logic behind having half of the board as an independent director. I hope I'm clear. There are other logic also for the corporate governance having such requirement, but this is the one of them. Correct. So public interest, quality management, that is something we need to understand when we are talking about corporate governance. And when you have a SR equity shares, that's the point of having independent directors, because it's a listed entity. Public interest is there, and to protect the public interest, you need to have independence. Any doubt? Any doubt? Okay. Now, this was with respect to the board of directors, composition of board, that is regulation 17.1. Now we'll talk about regulation 17.2, which talks about meeting of board of directors. Okay. Meeting of board of directors, regulation 17.2, basically. Now, the requirement of the provision with respect to meeting of board of directors is that the board of directors shall meet at least 4 times in a year. Okay, shall meet at least 4 times in a year with a maximum gap of 120 days between 2 meetings. Okay, so meeting of board of directors shall be at least, okay, at least 4 times in a year. With at least, or sorry, maximum gap of 120 days between 2 meetings. So board of directors have to achieve both requirements 4 times in a year, plus it should not be more than 120 days between 2 meetings. Okay. So accordingly, they need to manage their 4 meetings in a year. Okay. They can have more meetings also. There is no requirement, but at least there should be 4 meetings. That is regulation 17.2. Number of meetings of BOD. Now, quorum, what should be the quorum? When I'm talking about meeting, I need to talk about the quorum. Now, quorum for the every meeting. Okay. Again, like I'll first talk about top 2000 listed entities. Okay. Quorum for top 2000 listed entities. Now that should be 1/3 of total strength. One-third of total strength or 3 directors, whichever is higher. Okay, whichever is higher, but that should have at least one independent director. Okay, 1/3 of the total strength or 3 director plus at least one independent director. That is a requirement for quorum of top 2000 listed entities. Okay, top 2000 listed entities. Now, why 3 directors? If you see for top 2000 listed entities, the number of requirement for board of directors that we saw earlier. For top 2000 listed entities, at least 6 directors were required in BOD. According to that, 50% of this particular amount, that is 3 directors, was taken over here, one of the criteria, and 1/3, whichever is higher, that was proposed as the quorum, and then at least from that, from 1/3 or 3, at least one should be the independent director. Okay, that is the quorum requirement. Audio, video calls, or video call meetings and everything that is fine, that is allowed. And if a director is available through video call, that should be counted for the purpose of quorum. Those are the explanations and additional clarifications that were provided and that they have. So I'm not going to go in further details for that. Regulation 17.2A. Okay. Now that was meeting with the board of directors. Okay, regulation 17 and 17.2A basically. Okay. Then there are certain additional requirements of regulation 17 with respect to the roles and responsibility of board of directors. What should be the roles, responsibility, what board of directors should do? Okay. There are certain requirements. I'll explain that those requirements too. Now, for the first is board of directors shall periodically review the compliance report. The compliance report. Okay. Now, when I talk about compliance report with respect to all laws applicable to listed companies. Okay, compliance report with respect to all laws and regulations applicable to listed entity. Okay, so BOD shall periodically review and satisfy that they have reviewed the compliance report pertaining to laws and regulations that are applicable to listed entity. Okay, compliance report means these are the reports wherein a report is being prepared wherein it is mentioned, okay, these are the laws and regulations that were applicable to the listed entity and how the listed entity has complied with these regulations. Okay. Then board of directors should review the plan for the succession and appointment of the next board of directors. Shall review the plan for orderly succession of another board of directors. Okay, like from time to time, succession plan is there. Okay, if this person retires, then who will be appointed next, and everything those plans in for board of directors and key managerial personnel. So they need to review that particular plan from time to time basis. Then there is other requirement with respect to code of conduct and everything. Then there are requirements with respect to fees and compensations. So I will not go in much detail for those requirements. Now, there are certain requirements which are specified in schedule. Okay, that the minimum information to be placed before board of directors, the chief executive officer and chief financial officer shall provide a certificate of compliance. I'll show you that also. So, CEO and CFO, okay, shall provide a certificate of compliance, okay, to board of directors, as specified in part B of schedule 2. Okay, I'll show you this this certificate. This certificate is also important certificate that is required to be presented to board of directors, and board of directors are required to review it as a part of regulation 17. Okay, under this particular certificate, basically this certificate is issued by CFO, CEO, wherein they provide some details. See, certificate by chief executive officer and chief financial officer. Okay, we undersigned in respect of this, deliver, certify that. So these are the particular things which are there in schedule that I was talking about, part B of schedule 2. Okay, these are the conditions in part B of schedule 2, which is required to be certified by chief executive officer and chief financial officer, and that is to be presented to the board of directors. So if you see here, earlier we used to see in the certificate of compliance like auditor, they used to present to the members of some company, but here they are presenting to the board of directors of the company. Okay, because this is in part of the regulation 17. This is in accordance with the regulation 17 that the CFO CEO should present a certificate to the BOD. So that is a certificate that is presented by the CFO CEO to the BOD. Clear? That was regulation 17 with respect to BOD meetings, you can say appointment, reappointment, and other some conditions that are there. Any doubt till now? Any doubt? Sure. This is actually publicly available data. So this is a publicly available annual report, and in each annual report you will find these kind of certificates. Okay. So this is a publicly available one. You can even download from the internet. So that's not something specific or something available to me only. Any doubt till now? Any doubt? Guys, I'll also request, please take notes in your own handwriting, in your own way, so that at the time of exam, it will be very important and very easy for you to revise the notes. I am taking these notes that are perfectly fine, but I'll want you also to take these notes so that at the time of exam, it becomes very important for you to revise it and easy for you to revise it. Clear? Very important conditions, very important things that we are discussing over here. Regulations, okay, and how they are practically being followed. So this is something being practically followed also. This is not just on the paper that we are seeing here, but also practically followed. Trust me. These regulations are something, you can say being practically followed from time to time. And again, I'll show you a number of instances where the compliance of these regulations and annual report is being mentioned. Okay. So this is not something that is one-time thing or, written and just being, there in the books, but practically this is something which is there. And if you read any annual report of the company, any annual report, you will find compliance with these regulations. Okay. If you pick up any annual report, you will see, okay, this is in particular, this particular thing is in requirement of this regulation. This particular thing in required of this regulation. This particular thing in required of this regulation. So each and every detail which is there in the annual report is not given just for the purpose of, just additional information, but there are certain requirements also of these regulations. And as a part of regulations, this is there. Clear? Okay. There's a whole altogether a corporate governance report in annual reports, basically, okay, wherein all these details are basically, provided. Okay. Now, the next part that we are going to discuss for the corporate governance, okay, is with respect to maximum numbers, number of directorship, or the number of directorship a director can have as per the regulations. That is the regulation 17A. 17 we are done. Now we are looking for the regulation 17A. Maximum number of directors. Okay. Now, what regulation 17A talks about? Okay. Regulation 17A says that a person shall not be director in more than 8 listed entities with effect from 2019, and then that was reduced to 7 listed entities from 2020. So as of today, a person shall not be a director in more than 7 listed entities. Okay. Seven listed entities. So that is the first requirement. Person shall not be director in more than 7 listed entities. Okay, number one. Number two. Plus, this includes independent directorship. So, a person shall not serve as an independent director in more than 7 listed entities also. So, it should be director plus independent director both. Okay. So, when I talk about director, that includes independent director. Okay. Now, that was for the director. Now, what if a person is a managing director or a whole-time director? Okay. If a person is managing director and whole-time director, okay, in a listed entity, then he shall not serve as an independent director in more than 3 listed entities. So if he is a managing director and whole-time director, then cannot be independent director in more than 3 listed entities. Okay. So if you are a whole-time director or managing director in any listed entity, then he cannot be an independent director in more than 3 listed entities. Earlier, the requirement was 7. If you are a normal director, you cannot be an independent director in more than 7 listed entities. But if you are a whole-time director, it becomes 3. Very important. Okay. So if you are a whole-time director, it becomes 3. More than 3 listed entities. Okay. So that is the requirement with maximum number of directorship, and that goes with respect to the independent director or normal director. Other than this, there is a requirement in the company sec also, and you are required to comply with those requirements also. Okay. So if a person is a normal director, he should not be a director or independent director in more than 7 listed entities. If a person is a managing director or whole-time director, he should not be an independent director in more than 3 listed entities. That is regulation 17A. Clear? Any doubt? Any doubt, guys? Okay. If no further doubt, then let me ask one question. Okay. I'll ask one question. So let's see some questions that I want to discuss. Okay. Then we can proceed forward. Just a minute. Good. Good. Sorry for just sorry for the glitch. I'm not sure why it's stuck. Okay. So there is one question that I want to discuss. Okay. This is a particular question. In let's say audit committee, just a minute on this one. I'm sorry for the glitch. There is some issue at my end. It is not appearing. Okay, I'll dictate the question and then we can discuss. Okay. So the question is, let's say there is a company, APL Limited. Okay. Now under this company, okay, this company has a composition of board of directors. So the composition of board of director is okay, is one non-executive director, who has attained the age of 70 years. Then one director is director in 8 other listed entities. Okay, there is one more director, that is the managing director, MD. Okay, he is serving independent director in 4 listed entities. Okay, plus he is director in 8 entities which are not listed. Okay, then there is one non-executive, there is chairperson of board, who is non-executive director. Okay, and promoter of company. Okay, then there is a person who is basically sorry, then there is a director. Okay, one independent director who is director in 8 other listed entities. Okay, In total, in the composition of board, okay, in total, in composition of the board, there are 12 directors, out of which 4 are independent directors. Okay. So in total, in composition of the board, there are 12 directors, out of which there are 4 are independent directors. So let's go through these details one by one and understand what are the requirements and regulations that we understood just now, and what is the basically what should be the composition. Okay. So what is the current composition that we are looking here? What are the current composition, and what is the basically problem as per the regulation? Okay. So let's go one by one. Number one, we have a non-executive director, one non-executive director who has attained the age of 70. Okay, who has attained the age of 70. So you tell me whether there is any problem with respect to the listing regulations or LODR regulations. So one non-executive director who has attained the age of 70, is there any problem with this particular character as per the regulations? No. Correct answer. Correct, Rahul. Correct, Namrata. No. Reason because in the current case, the requirement was of 75 years. So we don't have any observation or we don't have any issue here. No issues. Okay. This is perfectly fine. Number two, one director is director in 8 other listed entities. One director is director in 8 other listed entities. Second number, one director is director in 8 other listed entities. Is there any problem with respect to the listing agreement? Answer is, come on guys, is there any problem with respect to the listed agreements? Yeah, LODR. Is there any problem with respect to the LODR regulations? Come on guys. Is there any problem with respect to this? Okay, good. Good, Rahul. Good, Sumit. Good, Namrata. Yes. So as per the regulations, we saw a director cannot be a director in more than 7 listed entities. Okay. More than 7 listed entities, regulation 17A. In the current case, he is the basically director in 8 listed other listed entities. Okay. So that is not appropriate. He should not be director in more than 7 listed entities. Okay. The MD, okay, he is serving as an independent director in 4 listed entities, and he is a director in 8 listed entities which are 8 entities which are not listed. You just write it clearly. Okay. So MD, he is serving as an independent director in 4 listed entities. Managing director is serving director independent director in 4 listed entities. Absolutely correct, Janvi. Correct, Namrata. And he is a director in 8 entities which are not listed. Correct, correct, Sumit. So basically, MD cannot be independent director in more than 3 listed entities. Okay. So what we saw is managing director or a whole-time director cannot be independent director in more than 3 listed entities. Here he is independent director in 4 listed entities, plus he is a director in 8 listed entities. Now, 8 entities which are not listed. So for the directorship, remember one thing: when we are talking about corporate governance LODR, we are not supposed to count entities which are not listed. Okay, so entities which are not listed are excluded. So still he is independent director in 4 listed entities, which is not appropriate. Should be independent director maximum in 3 listed entities. Okay. Chairperson of board who is non-executive director and promoter of the company. The chairperson of the board is non-executive director and promoter of the company. That is fine. Then we need to look this condition with respect to other conditions. Okay, I'll come into this a while. Let's go with the I think this is a repeat one. I will remove this one. This is a repeat. One independent director who is a director in 8 other listed entities. Same with the independent director. So again, this is also not allowed. He should not be independent director in more than 7 listed entities. Okay. Now, the last one, which is in conjunction with this particular, this one. So you need to read these two both together. This one, and this one. Okay. In total, the composition of board is 12 directors, out of which 4 are independent directors. And the chairperson of the board is a non-executive director who is the promoter of the company. So what should be the composition of board? The chairperson of the board is a non-executive director and a promoter of the company. Plus there are 12 directors, out of which 4 are independent directors. Correct, Janvi. Correct, Namrata. Very good. Come on, guys. So the chairperson of the board is a non-executive director, plus the composition of board is there are 12 directors, out of which 4 are independent directors. Is it appropriate? Correct, Namrata. No, Sumit, no. So the chairperson is a promoter also. Remember when we discussed about the chairperson composition, if a chairperson is promoter, related to promoter, KMP, or related to one level below of BOD, at least half of the BOD should be independent directors. In the current case over here, we have a chairperson who is promoter of the company. Okay, if he is a related of the promoter or promoter of the company or related to KMP or one level below BOD, half of the directors should be independent director. So here the composition of board is 12. Out of 12, half should be independent director. chairperson is promoter, so half of BOD should be independent director, and hence at least 6 out of 6 directors should be independent. Okay, at least 6 directors should be independent, where I have said that 4 directors are independent. So that is not appropriate. Correct, Rahul? Correct, Sumit. So this is how the requirement of corporate governance requirement is looked into. Now, one more thing I want to show in the annual report with respect to the same. I want to show you basically these requirements which are there also in our corporate governance report. Okay. So in annual report also, if you see, you have a composition of board given. In every company, every listed company, this is something as a part of the LODR regulations, it is provided. Okay, so composition of board of directors, okay, committee membership, chairmanship, and everything is given. Okay, in compliance with the regulations. So for the audit committee and other committee, we will see in a while. But let's talk about it for the board of directors. See, the chairperson is a non-executive director. Non-executive chairperson or non-executive director. Does he hold directorship in other companies? The answer is no. He is not a member also. Okay. Or neither a chairperson of other companies. Fine. You have a executive director, executive and managing director, executive director. So if a person is a managing director, whether he's a director, he can be independent director in 3 other companies. Directorship in other companies, 1. Member of other committees of other companies, 1. So well within the limit. Executive director, again, executive director maximum he could be, if he is a director or independent director, like normal executive director or independent director, he can be director in 7 other. Here it is only 1. Now these are the independent directors. Now independent director or normal director can be director in maximum 7 listed entities. So directorship in other companies, 1, 4, 1, 1, well within the limits. Okay. And if you see, it is written excluding private limited companies, foreign companies, Section 8 companies, and alternate directorships, which are not counted in my limit. So accordingly, that is excluded from here. So this information is given in accordance with the regulation to specify, okay, the directors are well within the limit of the regulations. Any doubt? Okay. Another thing is with respect to the meetings of board of directors that we saw, meetings as per regulation 17. Okay. As you see, during the financial year 2023, 8 board meetings were held. Minimum were required 4 with a gap of 120 days. Here 8 were held. 4th, 5th April, 27th April, 19th July, 21st October, 24th November, 19th January, 17th March, and 10th March. The interval between any 2 board meetings was well within the maximum allowed gap of 120 days. Okay, so the board of directors met in such a way that the maximum limit was met, like it should not be more than 120 days, and the 4 times in a year was also met. They met 8 times, and the requirement is at least 4. So they can go more than 4 times, so which is well within the limit. There are other certifications, compliance. Uh, there are other requirements of regulations that we'll see in a while, which are also part of, which are also mentioned over here, and we'll see in a while, which is with respect to the audit committee composition, other committee compositions. So if you see audit committee compositions, nomination and remuneration committee composition, CSR, risk management, stakeholder relationship, what is the composition of those committees, and we'll see that requirement in a while. Okay, what are the requirement of these committees and how these committees should be composed of as per the regulations. So basically, the next regulation will be regulation 18, which is with respect to the audit committee. Okay. But before we jump into the audit committee, let's take a quick 10-minute break. And after the break, we'll gather back and we'll continue with the audit committee composition and audit committee requirement as per the SEBI LODR regulation. Okay. So let's take a quick 10-minute break. Hello everyone, welcome back. So before I proceed to the audit committee's regulation, any doubt you guys have with respect to the directors, board of directors, regulation 1778? So there is one doubt. Can we write 50% instead of the half in the exam, like half of the board of directors composition or 50%? See, you can write half or you can write 50%. Okay. The and you can write these terms, but it should not change the meaning. Okay. When I talk about at least half or at least 50%, okay, that means at least you need to keep the certain words similar, like at least half it should be there. Okay. If you write maximum 50% or something that like that, if you change a bit of word, which is at least, maximum, minimum, that can be a problem because it changed the meaning. But half or 50%, I don't think so it will be a problem. Okay. So if it is 50% or half, then it is fine. Otherwise, I'll suggest stick to the wordings of the provision which are there. Any other doubt? No? Okay. Let's proceed to the next part of the regulations. Very important one, which is with respect to the audit committee. Okay. Now, with respect to the audit committee, okay, there is a regulation 18 which talks about what is the requirement of regulations and everything. On the same hand, there is a section 177 of the Companies Act which also provides details on the audit committee. We'll see both. We'll compare both. Okay, one by one. But first, we'll look into regulation 18. Audit committee. Regulation 18. Okay. Now, what regulation says is that every listed entity shall have a qualified independent audit committee in accordance with the provisions of this regulation. Okay. Every listed entity should have a qualified and independent audit committee. Whereas if you look into section 177, okay, the board of directors of every listed company and such other class of companies shall constitute an audit committee, and such other class includes public companies having paid up share capital of 10 CR or more, public companies having turnover of 100 crores or more, public companies having in aggregate total outstanding loans of 50 crores or more. Okay. So not only listed, but public companies with these conditions shall also have an audit committee. Means regulation 18 talks about listed entity. Section 177 of Companies Act talks about listed plus other public companies. Unlisted one, where you have a turnover, paid up share capital, and outstanding loan requirement. Okay. So 177 is more stringent than your normal regulation 18. Okay. So regulation 18 says every listed entity shall have a audit committee. But here the word is qualified and independent audit committee. And I'll tell you why. Qualified and independent audit committee. Okay. When I say qualified, okay, the word qualified takes me to the another part of regulation 18, which says that all members of audit committee shall be financially literate. all members of audit committee shall be financially literate. Okay, and at least one plus and at least one member shall be or shall have accounting or financial management related expertise. Okay, so they should be financially literate plus at least one member shall have accounting or financial management related expertise. That's why it is used the word qualified. And what I mean by financially literate means ability to read and understand the basic financial statement of the company. That is something financially literate, and that is defined in the regulation itself. Okay. Now the second word was independent audit committee. One was the qualified audit committee, and the second is independent audit committee. Now, why independent? Like, what is the purpose of having this word? Independent, because the other part of regulation 18 talks that at least 2/3 of members of audit committee, okay, shall be independent directors. Okay, shall be independent directors. However, if outstanding SR equity shares are there, then the audit committee shall comprises of only independent directors, means fully independent directors. All members shall be independent directors. Okay, that's why the word independent is used, because by default, at least you should have a 2/3 of that members of audit committee as an independent director, which makes by default my audit committee as an independent audit committee. That's why the word qualified and independent audit committee is used in the first regulation itself, that every listed company or entity shall have a qualified and independent audit committee. Okay. Then the chairperson of the audit committee shall be an independent director. Okay. Along with this, the chairperson shall also be an independent director. Okay. That was the composition of audit committee as per regulation 18. Okay. Then comes the meeting of audit committee. Okay. Meeting of audit committee. Now, the meeting of audit committee, again, on the similar lines, at least 4 times with not more than 120 days between 2 meetings. So at least 4 times in a year with not more than 120 days gap between 2 meetings. So at least 4 times they should meet, and not more than 120 days should be there between 2 meetings. And the quorum for the audit committee meeting, okay, the quorum for the audit committee meeting shall be at 2 members or 1/3 members. Two members or 1/3 members, whichever is greater or higher. Along with that, at least 2 independent directors plus 2 independent directors. So when I talk about quorum, at least 2 members should be there or 1/3 of the members. When I have a 2 members, so both of them should be independent directors. So when I talk about 1/3 member, at least 2 should be independent directors. Okay, at least 2 should be independent directors. That is a meeting of quorum of audit committee. Now, when I talk about audit committee, okay, there is a minimum director, minimum membership prescribed, like how many members should be there at least. Okay, so including everything like these conditions in the audit committee, at least there should be minimum 3 directors. Okay, at least minimum 3 directors. And when I talk about 3 directors, 2/3 should be independent directors, means 2 directors, it should be independent. That is the quorum, and that is a minimum requirement for my quorum. That is 2 independent directors or 2 directors who should be independent. Okay, so at least 3 members, that is 3 directors as a member. Okay, then 2 quorum or 1/3, and 2 should be at least independent directors in quorum. And 2/3 of total members shall be independent directors. If SR outstanding, all members should be independent directors. Clear? That is a requirement of regulation 18 with respect to the audit committee. Now let us see the same in one of our annual report. Okay. Just give me a minute. I'll show you the audit committee. Yeah. So, yeah. Okay. So we were discussing about this particular chart over here where there was a constitution of audit committee. Now, if you see, minimum 3 directors should be there. So they have 1, 2, 3, 4, 5. 5 members of audit committee. Okay. Chairperson and accordingly 4 other members. Okay. Now, and all members are, if you see, all members are independent directors. So that is also satisfied. At least two-thirds should be independent directors. Here, all members are independent directors. Okay. All members of the committee have relevant experience in financial matters. So qualified audit committee, that is also being satisfied. Okay. Then I'll come to these particular the requirements of audit committees working. Okay, what they should review and what is the scenario. But before that, let's talk about the meeting of audit committee. The audit committee met 6 times. So at least it was 4 times. They met 6 times. That is April, July, this July, October, December, and January. Okay. And if you see, there is not more than 120 days gap between all the meetings. So that is they are also satisfying that particular condition. That is 120. There should not be more than 120 days gap between 2 meetings. Okay. That is there. The attendance, everything is there. So that is specified. Okay. Now, with respect to the activities of committee during the year. Okay. Roles and responsibilities of audit committee during the year. Now, that is also something, if you see roles and responsibilities of audit committee, that is prescribed under part C of schedule 2. Okay. Part C of schedule 2. What is the role and responsibility of audit committee? The role of audit committee as per the regulation. Okay. We'll come on that. We will go and see the part C of schedule 2 and we'll discuss that in a while. But before that, I want to just discuss about section 177 of the Companies Act. Okay. Section 177 of the Companies Act. Now, why? The reason because I want to discuss about the constitution of audit committee as per section 177. If you read section 177, it says that the audit committee shall consist of minimum 3 directors. Like here, at least 3 directors should be there. Okay. Over there, it is minimum 3 directors with independent directors forming a majority. That is, majority should be independent directors, more than 50%. And here, it is 2/3. Okay. Now, the question is, are both similar, like 2/3 members shall be independent or majority shall be independent? Are both similar? Answer is no. Okay, when I talk about majority, it can be 51% also or more than 50%. But when I talk about 2/3, it is more than 66.67%. So there is a difference between majority and 2/3. Okay, usually when the number of audit committee members is less than 5 or 6, 2/3 or majority will become, the same. But when the audit committee members number is higher, so the 2/3 or majority plays a crucial role to understand. Okay. Then the requirement of section 177 talks about that the majority of the audit committee members, including its chairperson, shall have an ability to read and understand the financial statement. Majority. Here it is said that all members of audit committee shall be financially literate, means ability to read and understand the financial statement. So in that case, this is more stricter compared to 177. Okay. Then there are requirements of audit committee or working requirements that what audit committee should do. That is in 177(4) of Companies Act, that they should recommend the appointment, remuneration of auditors, review, monitor auditors' independence, examination of financial statement, approval of any subsequent modification of transactions of the company with related parties. Then there is a related party requirements, omnibus approval and everything. Then there is a approval requirement for any director if they are entering into a transaction with the company. Okay. Scrutiny of intercorporate loans, valuation, and a lot of things are there. Okay. In respect to the working of audit committee. Okay. Then there is a vigil mechanism requirement and under section 177 also. Okay. So that is the requirement of 177. But when you come to the working requirements or the roles and responsibilities of audit committee as per regulation, okay, 18, that is Part C of Schedule 2. So Regulation 18.3 talks about Regulation 18.3 and Part C of Schedule 2. If you look into these requirements, they are more wider and they contain more requirements, roles and responsibilities compared to Section 177 of Companies Act. Okay, so they contain a lot more requirements than compared to Section 177 of the Companies Act. Let me bring onto the screen the requirement of Part C of schedule. So I'm directly showing you the regulations itself where the schedule is mentioned. Because why I'm directly showing the regulations? Because it is very important to understand the roles and responsibility of the audit committee in detail. Okay, which is basically to understand word by word what is the role and responsibility. Okay. Remember in Regulation 17 in Directors Regulation with respect to Board of Directors, there was minimum information to be placed before Board of Directors as a Part A of Schedule 2. That is a minimum requirement. Then there was a Part B, which was compliance certificate by CEO and CFO that we saw. That is the Part B over here. Now the Part C is the role of Audit Committee and review of information by the Audit Committee. This is a very important part. Regulation 18.3 that I was talking about. Okay. So what Regulation 18.3 or Part C talks about, that the following shall be the role of Audit Committee. 1. Oversight of the listed entity's financial reporting process. Disclosure of its financial information to ensure financial statement is correct and sufficient and credible. So oversighting the listed entity's financial reporting process, the first role. Okay. Then recommendation for appointment, remuneration, and terms of appointment of auditor for the listed entity. This is in similar lines with the Section 177. So 177 also talks about recommendation for appointment of auditor along with the remuneration and terms of appointment. Then approval of payment to statutory auditor for any other service rendered by the statutory auditor. Going a step ahead, if statutory auditors are rendering any other service, then approval of payment for that. Fourth, reviewing with the management the annual financial statement and auditor's report thereon before submission to the board for the approval. Remember, there in essay we used to say communicating with those charged with governance. If audit committee has been given the task of governance over here, then reviewing the communicating with those charged with governance, the audit report, the form and content of the audit report. On the same side, there's a requirement on the audit committee to review the audit report. Essay plays a responsibility on the auditor, and the regulation plays a responsibility on the audit committee. Okay. Now, what they should review in the financial statement and audit report, that is also mentioned over here. So, what they should review is matters required to be included in director responsibility statement, changes, if any, in accounting policies, practice and reasons thereof, major accounting entries involving estimates based on the exercise by the management, significant adjustment made in the financial statement, compliance with the other listing and other legal requirements, disclosure of related party transaction, and modified opinion to the draft audit report. If you see SA 260, okay, if you see SA 260, these things are also part of SA 260, wherein you are required to communicate details to those charged with governance with respect to these areas. Okay, so what SA 260 also talks about is, you need to refer, or you need to discuss or communicate management with respect to major accounting entries, significant matters arising, significant difficulties, okay, circumstances that affect the form and content of the audit report, auditor's view about significant qualitative aspects of accounting practice, accounting policies, judgments which are there, okay. So all these things are also part of SA 260. On the other hand, they are also part of my regulation. So vice versa, one side SA puts some requirements, another side regulation puts some requirement. Then fifth, reviewing with the management the quarterly financial statement before submission for the board to approval. So a listed company is required to issue quarterly financial statements. So the review of quarterly financial statement is one of the area. Then reviewing with the management the statement of use and application of funds raised through an issue like public issue, right issue, preferential issue. The statement of fund utilized for the purpose other than stated in the offer document. Okay. Utilization of a proceed of public issue or right issue or issues, and making appropriate recommendation to the board to take steps in the matter. Same point you can refer in the CARO also. Okay. If you refer to the CARO, okay, over there is the same requirement with respect to the utilization of funds. In CARO, basically, management is we are required to report whether whether the funds which were raised on short-term basis have been utilized for the long-term basis. That is para 3.9 of CARO. Then application of IPO and FPO, again same para 3.10 of the CARO. Okay, which is wherein we are required to report whether monies raised by the way of initial public offering and further public offering were applied for the purpose which they were raised for. If not, then the details of that. And if there is a delay, then the details of delay. Okay, in para 3.10 of the CARO. So on the similar lines, it is a responsibility on the audit committee to review the same. And for the auditor, it is para 3.10 of the CARO where they are required to report this particular detail. Okay. Then reviewing and monitoring auditors' independence and performance and effectiveness of the audit process. Approval of subsequent modification of transaction of the listed entity with related parties. Okay. Scrutiny of intercorporate loans and investments. Then valuation of undertaking of assets and of the listed entity. Evaluation of internal financial control and risk management system. Reviewing with the management performance of statutory and internal auditors and adequacy of the internal control system. Same we have in CARO also. Okay. In CARO, there is a requirement on the auditor to report on the adequacy of internal financial control systems. Okay. So if you see para 14 of the CARO, which talks about internal audit system sufficient size features business. So same on the line, it's here also. So one side is a responsibility of the statutory auditor, on the other side it's a responsibility of audit committee. Same, reviewing the adequacy of internal audit function, if any, including the structure of internal audit department, staffing, seniority, and other parts of internal audit. Discussion with the internal auditors of any significant findings and follow up thereon. Reviewing the findings of any internal investigation by the internal audit to the of internal system of a material nature reporting to. Okay, and same is there in the CARO also. Whether the reports of internal auditors for the period under audit were considered by the statutory auditor, or whether the reports were made available or not. Okay. Then there is another section in CARO which talks about compliance with 177 and 188. So along with this, in CARO, we are required to report whether all the transactions of related party are in compliance with 177 and 188 of the Companies Act. When I talk about 177, that is approval by the audit committee for the related party transactions. So this is how everything is interlinked. Then the next is discussion with the statutory auditor before commencement of the audit about the nature and scope of audit, as well as post discussion to ascertain any area of concern. To look into the reason for substantial default in the payment to the depositors, debenture holders, shareholders in case of non-payment of declared dividends and creditors. Same you have a CARO also in CARO with respect to the defaults. So if there is any default, then you need to report that particular thing. So there is para 3.5 of the CARO, which talks about compliance with the public deposits. That is section 73 to 76 of the Companies Act and other regulations which are there. To review the functioning of the whistleblower mechanism. Approval of the appointment of the Chief Financial Officer after assessing the qualification, experience, and background of the candidate. So approval of the CFO's appointment. That is something done by the audit committee. Carrying out as other functions as required, as mentioned in the terms of audit committee. That is there. Okay. Then reviewing the utilization of loans or advances from investment by the holding company in the subsidiary company exceeding 1 crore or 10% of the assets of the size of subsidiary. Okay. Then consider and comment on the rationale of cost benefit impact of schemes involving merger, demerger, and amalgamation. So these are certain additional requirements of the audit committee. Now this is something, the role that is there in the regulation itself, that the audit committee has to fulfill. Role of the audit committee. However, other than that, there is a part B, which talks about the audit committee shall mandatorily review the following information. And as an auditor, when we are certifying a compliance with section or regulation 17 to 27, we are required to review whether this information has been reviewed by the audit committee or not, which is management discussions and analysis of financial conditions and result of operations, management letters and letters of internal control weakness issued by the statutory auditors, which is under SA 260 and 265. Then internal audit report relating to internal control weakness, appointment and removal in terms of chief internal auditor and subject to other conditions, statement of deviations, quarterly statement of deviations including report of monitoring agency, if applicable, submitted to stock exchange, and annual statement of fund utilized for the purpose other than those stated in the offer documents of the prospectus. So same we discussed above, para 310, same where they are required to review these annual statement of fund utilized. So that is the role of audit committee, plus the other information that the audit committee shall mandatorily review as per part C of schedule 2. Now, this could be a lot of information. This could be a lot of roles. Okay, a lot of details. What I will suggest is to remember what are the roles and responsibilities. I'll suggest go one by one, each and they are based on the logic. Okay, logically, what audit committee is required to do as a role of their oversight, as a role of their those charged with governance. Okay, audit committee is in the form of governance. They are for the governance. They are not required to get involved into day-to-day operations, but their role is of oversight, and accordingly, they are required to perform their roles and responsibilities, which is managed over, which is reported over here. So logically, if you see, it is the same oversight responsibilities, nothing else. Okay. Any doubt till now? Any doubt? Any doubt? Okay. I'll show you the same roles and responsibility in annual report. See, when you were referring to the key terms of reference of committee, like activities of the committee during the year, these are the same activities which we just now saw. See over here. Overseeing the company's financial reporting process and disclosure of the financial information, reviewing, examining with the management the quarterly and annual financial results, reviewing management discussion and analysis of financial condition and results of operation, recommending the appointment, remuneration and terms of appointment of statutory auditor, reviewing and monitoring statutory auditor independence, performance and effectiveness of audit process. Okay. Reviewing, approving, subsequent modifying related party transactions, advocacy of internal audit function, management letters issued by statutory auditors, evaluating internal financial controls, verifying the system of internal controls and for the compliance with prohibition of insider trading regulations, reviewing function of code of business and vigil mechanism, reviewing utilization of loans from investment in the subsidiary exceeding 1 crore, 100 crores or 10% of the asset side of the subsidiary, recommending the appointment of remuneration to be paid to the cost auditor, and whether they are doing quarterly or annually, everything is mentioned over here. So the roles and responsibilities we just now saw is also specified over here in my annual report. What is the role and responsibility of the audit committee? Clear? Any doubt? Any doubt? With respect to audit committee? Okay. If you see some more details with respect to audit committee, like the board of directors, based on the recommendation of audit committee at their meeting held on 19 July, appointed X of as an internal auditor of the company with effect from this, succeeding the earlier internal auditor. So this is how the role of audit committee is, and this is how in actual it works also. So it's not something on the paper, but this is actually works in that way. These are the recommendations, these are the roles and responsibilities, which are actually also being followed by the audit committee. I'll write here refer regulations. Now, coming to section 177, as I told you, section 177 has certain requirements, but 18.3 or Part C of Schedule 2 has more requirements. Okay, so it is in more detail compared to Section 177 of the Companies Act. Now, another important part that I want to discuss is resignation by the auditor, and that is in line with there was a requirement, a circular by SEBI, okay, with respect to SEBI LODR only, okay, under Regulation 18.3. So, what was the requirement basically here is that I'll show you the circular also along with just a minute. So that it will be very easy for you to understand. Just a minute. I think there is some issue at my end. I'm really sorry for that. Just give me a minute. I'm not sure why it is not opening. Sorry. Mhm. Since morning, the system is getting stuck. Sorry for that. Okay. Yeah. So this particular circular that I'm going to show you is basically issued by SEBI with respect to the requirements of resolution of the auditor. Okay. And this circular places some requirements on the auditor plus on the audit committee with respect to compliance with this particular circular. Okay. This circular was issued on 18 October 2019. Okay. With respect to the resignations of the statutory auditor from the listed entity and their material subsidiaries. Okay. Under SEBI LODR regulations. So, if you see Regulation 18.3, that's the role and responsibility of the audit committee. Okay. So the audit committee has to make recommendations for appointment and remuneration and terms and appointment of the auditor of listed entity. Okay. And under subclause 7 that we just now saw, audit committee is also responsible for reviewing and monitoring the independence performance of the auditors and the effectiveness of the audit process. Okay. There are other regulations also. And in light of those regulations and in light of those particular requirements, okay, SEBI brought in detailed requirement with respect to what is the role and regulation of auditors when they are resigning. Okay. So what SEBI brought is that for all listed entities and material subsidiaries, okay, this compliance should be added by the company, okay, which is that if auditors resign within 45 days from the end of the quarter, okay, then he needs to issue the limited review or audit report for such quarter. If the auditor resigns after 45 days from the end of quarter, then before resignation, auditor needs to issue limited review report for the such quarter as well as the next quarter. To summarize, this particular requirement, to summarize this particular requirement, you need to understand the end of quarter. Okay. And accordingly, 45 days before, after, and the previous limited audit or limited reviews or audit report that has been issued by the auditor. So let's say end of quarter. Now, end of quarter could be like 30th June. Okay. 30th September, 31st December, and 31st March. "45 days period before," this is before, and this is 45 days period after. Okay. Now, if auditor resigns somewhere before the 45 days of the end of the quarter, then he needs to issue limited review or audit report of that quarter. Okay. If the auditor resigns somewhere after the end of quarter within 45 days, okay, then he needs to issue limited review report or audit report of previous quarter that has been gone, like, after which he is resigning, plus next quarter. Now, why? What is the requirement of next quarter? Okay, you need to understand that. See, if the auditor, okay, if the auditor is resigning after 45 days, after 45 days from the end of the quarter, so this will be somewhere here. Not here. This will be somewhere here. And why? I'll tell you the logic behind this. Okay. Now, let's say, for example, if the auditor is resigning after 45 days from the end of the quarter, that will become before 45 days of the next quarter. So if I talk about in timeline wise, let's say I have a 30th June, then I have 45 days over here, then another 45 days because it's a quarter, okay, 3 months, okay, 90 days, again 45 days, and I'll have another quarter, 30th September. 45 days is a midway, then another quarter, 31st December, another 45 days, another quarter, that is 31st March. Okay. Now, the first condition says that if auditor is resigning within 45 days from the end of a quarter, within 45 days from the end of the quarter, okay, then he needs to sign the audit report of the quarter itself. So if he is resigning over here, he needs to sign audit report or limited review report of 30th June. But if he resigns after 45 days of the end of the quarter, let's say that is 30th June, and he is resigning after 45 days, somewhere here, then he needs to sign audit report or limited review report of this quarter, that is June quarter, plus September, And why September? Because this becomes again 45 days, within 45 days of the quarter for September quarter. Okay. After 45 days of the end of the quarter becomes also within 45 days of the next quarter. So if he resigns somewhere here, the first condition triggers, that is within 45 days from the end of the quarter. So he needs to sign audit report of the previous quarter, that is 30th June. By default, he has to do, and the next quarter, because he is signing within 45 days of the next quarter. And same way, if he has signed 30th June, 30th September, 30th December, he needs to sign by default 31st March also. So that is a requirement of the circular. Circular 114 of 2019. I hope I'm clear. Any doubt with respect to resignation to the auditor? So if he resigns within 45 days, then he needs to sign for that quarter. If he resigns after 45 days of the end of the quarter, then he needs to sign the quarter which is gone plus the next coming quarter. And if he has signed all the 3 quarters, in that case, he needs to sign the 4th quarter also and the financial and annual report, audit report also of the financial statement for the year. Any doubt? Any doubt till now, guys? Is it clear that what is the requirement of auditors when he is resigning in case of a listed entity? And why I am discussing this with respect to the audit committee, I'll tell you. So the next is, along with the requirement, okay, of the resignation, okay, when along with the requirement of issuing audit report or limited review report, there are other conditions also with respect to listed entity and its material subsidiary to the audit committee. Okay, reporting the concerns to the audit committee and the role and responsibility of the audit committee in case when auditor approaches the audit committee. And what is that is, let's understand. In case of any concern with the management of the listed entity or material subsidiary, such as non-availability of the information, non-cooperation by the management, which hampers the audit process, the auditor shall approach the chairman of the audit committee of the listed entity, and the audit committee shall receive concern directly and immediately without specifically waiting for the quarterly auditing meetings. So audit committee here has to receive such concerns without specifically waiting for quarterly audit committee meetings. So they need to receive the concerns from the auditor and they need to work upon the concerns that has been provided by the auditor. Okay. In case auditor proposes to resign, okay, all the concerns with respect to the proposed resignation along with the relevant document shall be brought to the notice of audit committee. In case where the proposed resignation is due to the non-receipt of information and explanation from the company, the auditor shall inform audit committee details of information, explanation sought and not provided by management as applicable. So the auditor needs to provide the detail, okay, to the audit committee, the details that were not received from the management, explanation not received by the management, explanation not received from the management, and the details that why they are resigning. Okay. Jani, I have received your doubt. Just let me finish. I will definitely take it up. It's very important. Your question is very good. Okay. Then, on receipt of such information from auditor relating to the proposal to resign as mentioned above, the audit committee, from here it is very important. The audit committee Board of Directors, as the case may be, shall deliberate on the matter communicated and communicate its views to the management and the auditor. So audit committee has to report their opinion, okay, their views to the management and auditor, that okay, whatever information they have received or the reasons they have received from the auditor for the resignation, and what audit committee thinks on that. Then there is other requirements on the auditor with respect to the reporting, like in case of a listed entity, its material subsidiary does not provide information required by the auditor. To the extent the auditor shall provide an appropriate disclaimer in the audit report, which may be in accordance with the SA specified ICI or NAFRA. Okay. Then the listed entity or material subsidiary shall ensure that the conditions mentioned in 6A, 6B of above are included in the terms of appointment of the statutory auditor. Same way, if you read SA 210, preconditions of the audit, that is the same line also. Okay. So these are the same conditions which are there. Along with that, auditor is also required to submit some information in Annexure A, okay, upon his resignation. This is required to be submitted to the SEBI in specified format. In that format, I'll just show you. This is basically information, that is format of information to be obtained from the statutory auditor upon resignation. So that is required to be obtained by the company also, plus auditors is required to provide to these two other authorities also. Name of the listed entity, details of the statutory auditor, details of association with the listed entity or material subsidiary, like date on which the statutory auditor was appointed, date on which the terms of statutory auditor was scheduled to expire, prior to resignation, the latest audit report or limited review report submitted by the auditor, detailed reason for the resignation, okay, and other information that is there, like whether the inability to obtain sufficient and appropriate audit evidence was due to management imposed limitations, whether the lack of information would have significant impact on the financial results, whether the auditor has performed alternate audit procedures to obtain appropriate audit evidence for the purpose of audit or limited review as laid down in SA 705, whether the lack of information was prevalent in the previous report or financial results, okay, any other facts about the resignations or like that way. So all these details are required to be obtained from the auditor in this annexure. So that is some additional requirements which are required to be fulfilled. And this particular information, when it is obtained by the entity from the auditor, okay, upon resignation, this information then is also required to be disclosed as a part of, as a part of other, along with other information that we just saw in the annual report. So the listed entity shall ensure disclosure of the same under subclause 7A of Part A of Schedule 3 under Regulation 30. That is the regulation that we are seeing, the details which are there in the annual report. So this is the requirement of the circular or SEBI circular on the basically resignation of the auditor. Now there was a question with respect to resignation period. Okay, let's take that one. So the question was, what if the auditor resigns first 45 days after 30th June? So if auditor resigns within 45 days after 30th June, so you are saying auditor resigning somewhere here after 30th June. So it is not after the end of 45 days of the quarter, then he needs to issue audit report or limited review report only of 30th June. If he is resigning somewhere here, then limited review report or audit report of June quarter. If he resigns after 45 days from the end of 30th June, okay, then in that case, auditor is required to issue limited review report or audit report for the 30th June plus 30th September. Clear? Any doubt? Any doubt with respect to resignation by the auditor? Any doubt, guys? No? No doubt? Okay. So generally, if there is a resignation, then it is mentioned in the annual report or audit, the annual report issued by the company. But when there is no resignation or there is no such things, then it will not be mentioned in the, like, there will not be there in the audit report itself. Okay. So, okay. So there is one more doubt. What if the auditor resigns first 45 days after 30th June, within first 45 days? So yes, if the auditor resigns within first 45 days, then this is a scenario which is applicable, that he needs to issue limited review report or audit report for the June quarter only. If he resigns within first 45 days after 30th June. I hope I'm clear. Janvi, now is it fine? Like, if he resigns within first 45 days after 30th June, then he needs to issue limited review report or audit report for the June quarter, not for the September, because it's within 45 days period. Okay. So that was with respect to resignation by the auditor and some information on the role of the audit committee when an auditor resigns. That's why I took this with the audit committee. So because audit committee also plays an important role in this scenario. Okay. Now I'll quickly cover one more committee, that is nomination and remuneration committee. Because it's very small provision for the nomination and remuneration committee, I'll cover quickly, and then I can also show you the same in my annual report. Okay. Now the nomination and remuneration committee, that we saw board of directors, we saw audit committee. Now is time of for the nomination and remuneration committee, which is regulation 19. So what this says, that board of directors shall constitute a nomination and remuneration committee. So it's a responsibility of the board of directors to constitute this particular committee. Okay. But how this committee should be constituted? What should be the structure of the committee? So the committee shall comprises of shall comprise of at least 3 directors. Minimum 3 directors. Okay. All directors shall be non-executive directors. Minimum 3 directors, and all directors shall be non-executive directors. Okay. And out of these, at least 2/3 shall be independent directors. Shall be independent directors. Plus, the chairperson of the nomination and remuneration committee shall be independent director. Plus, uh, the chairperson of the listed entity, okay, whether executive or non-executive, may be appointed as a member but should not be appointed as a chairperson of such committee. So the chairperson of the board of directors can be member of this committee, but he shall not chair the committee. So there is an option to appoint chairperson as a member, but he should not be appointed as the chairperson of the committee. Because all directors shall be non-executive directors. Okay. Now, if the chairperson of the listed entity is a non-executive director, he can become a member. But what if he is the executive director? In that case, he can become member, and one more condition is he shall not be appointed as a chair. So you can say exception to this. Chairperson of board being executive director can become member of this committee, provided he shall not be the chairperson of this committee. Okay. So exception to this particular thing, that all directors shall be non-executive directors and minimum 3 directors. Chairperson of the board being executive director can become member of this. Okay. Then the quorum for the meeting of the nomination and remuneration committee shall be either 2 member or 1/3 member. Shall be either 2 members or 1/3 members, whichever is greater or higher, provided at least one independent director should be there. Director should be there. The nomination and remuneration committee shall meet at least once in a year. meeting, that is at least once in a year. So there is not much requirement like audit committee or board of directors. So they are required to meet at least once in a year. And the roles and responsibilities are specified again. We saw part C for the audit committee, part D is for other committees. Roles and responsibility. Part D of schedule 2. So if you see schedule 2, part D, part D of schedule 2, that's the role of other committees other than the audit committee. And the first one is the role of nomination and remuneration committee. Okay. So this is the role of nomination and remuneration committee. There are two to three things only. That is formulation of the criteria for determining qualification, positive attributes, and the independence of a director. Recommend to the board directors a policy relating to the remuneration of the directors, key managerial personnel and other employees. See, with the name itself, it's a nomination and remuneration committee. So their role is to provide the criteria for the nomination of the directors and to decide the criteria for the remuneration of the directors. Okay, so same way, formulation the criteria of determining the qualification for the directors, like who can be a director, and the remuneration of the directors. Second, for every appointment of the independent director, nomination and remuneration committee shall evaluate the balance of skill, knowledge, experience of board, capabilities required as an independent director. Okay. Then formulation for criteria and evaluation of performance of independent directors, policy on diversity of the board of directors, identifying persons who are qualified to become directors and who may be appointed in senior management in accordance with the criteria, whether to continue the term of appointment of independent directors on the basis of performance of evaluation, recommend to the board all remuneration in whatever form payable to the senior management. So these are certain roles and responsibility of the nomination and remuneration committee. Now, if you see annual report, so what was the criteria for the nomination and remuneration committee? That at least 3 directors, we have 4 directors over here. Now, let's understand the composition. So the composition earlier, as per the regulation, should be that all directors should be non-executive and at least 2/3 should be independent. Okay. Over here, all the directors are independent directors and non-executive directors. So they have satisfied the condition. Chairperson of the committee should be a should be non-executive. Okay, same. Both are all are independent. So there is no question of being executive director or someone else. Okay. Then they should meet at least once in a year. So if you see, the nomination and remuneration committee met 5 times in a year, which is more than the required one. So that is also fine. Attendance, every member was present in all the meetings. 100% attendance means quorum was also there. And if you see the activities, these are the same which we just now saw. Identifying the dates, for the appointment, balance of skills, review of determining all elements for remuneration, ensure succession planning, board ordinance or to the senior manager, and all things. Clear? So that is something nomination and remuneration committee. all the details, then what are the skills they are looking into from the point of view of directors, and everything is mentioned in the annual report, like what skills and everything they are looking into, and reward policies and all those stuff, which we just now saw that the role and responsibility of the nomination and remuneration committee. So simultaneously we are also seeing how it is being reported in the annual report. Any doubt, guys? Any doubt? Okay. So this was till the nomination and remuneration committee. So there is one doubt. Okay. Can one director can be member of both committee? If a director is a chairperson of one committee, whether he can be chairperson of other? Now see, there are some requirements that are required to be fulfilled with respect to the membership of the committee. Okay. Those requirements, like there is a regulation 26. Okay. A director cannot be a member in more than 10 committees, or he cannot act as a chairperson in more than 5 committees. But there are some exceptions. There are some, additional requirements of stakeholder relationship committee. We saw requirements of audit committee. So in next lecture, I will be discussing regulation 26, wherein we will be discussing about the, maximum number of committee membership a director can hold, and accordingly, what are the exceptions and what are the inclusions for that. So I'll be discussing in the next lecture for that. Any other doubt? Any other doubt? No? Okay, guys. So in the next lecture, my target will be in the, to complete some of the regulations that are critical from understanding point of view, and to cover maximum practical questions of all the regulations, so that you can be, pretty much clear about the practical questions on the regulations, on the LODR order committee topic. Okay. But for that, I need support from your side. I need that you should be, ready with the other regulations. You should have read the other regulations, so that when I will discuss the questions at that point in time, I will be expecting answer from your side and participation from your side. Okay. So in the next lecture, which is tomorrow itself, we will be covering rest of the topic and the practical questions, more practical questions on this particular topic. Okay. If no further doubts, then guys, thank you. Thank you for your time. I'll see you in the next lecture tomorrow. Thank you, guys. Thank you.